How we're looking at the Dow. We are seeing prices starting to take a nice bounce today, about 200 points. But we got to remember, everybody gets all very excited. Sometimes you got to remember where you came from here. We dropped from 103 down into this 17 250 level. So we really had a very significant drop, about 1,000 Dow points. So we're seeing a little bit of a recovery. So in reality, about a quarter of the move is just recovered so far. So getting really crazy optimistic I don't think is appropriate. We also had, as we talked about, significant divergence here in the swing move highs. So I think it's really showing, and I've been discussing that, the fact that it could be losing some momentum to the upside. That doesn't mean that you don't, after 1,000 Dow points, get a reactionary move. I mean, I think that makes sense. What we're looking for here, though, is to find out if it's really making that break back once again with some momentum. I think that the very important point will be this 17,750 level. I think that's very significant, and of course the R1800, 18,000 level. But I will you got to watch to see this, really see if it can break through this 17,600 range. If it does, I think we'll see another 150 point move easily, maybe 200. That's where I think we start to see this kind of weaken. And really, what we're seeing, as I said, is a reactionary move. I mean, that this could start to really stall and start to break. And it would not surprise me, because I talked about this cycle we're in here that could really get pretty negative. Now, as I said, we also are in a technically in an uptrend technically, but we're losing some momentum, which really concerns me, I think, for the longer term, because I do think that we've way overextended. We don't have we are really looking at a market environment that's not, that's, I think, not as healthy as people would like you to believe. We have a lot of debt on the books. We have, interest rates I think, are going to be a very big factor, coming in the coming year. And I just think that we're really, I think, poised for a very serious crisis, in my opinion. But we had a lot of Fed intervention that helped a great deal on this market, and it helped, I think, pad the numbers a little bit as far as how nice the economic picture. I just don't think that that's a realistic, thing. When you're saying, okay, this is normal operations. You normally don't throw, almost 90 billion every month into, market operations. So, to me, for everybody to say, well, that's normal, and this is the market we always wanted, I think that's kind of naive. But anyway, I think it always just makes sense for traders at this point to start to realize that, hey, we could be getting to the point where we could be running out of real estate here. And I think we're getting very close to that. So just protect yourself in that regard. I'm not trying to throw the doom and gloom thing here, but we are coming up on a very important cycle, and this could be a very strong cycle. So don't underestimate it. It's better to be prepared than to be in denial.